Hey everybody, this video is going to cover what the best settings for your charts are going to be when doing technical analysis on stocks. To start off, just a quick, if you're brand new to stocks or brand new to technical analysis, here's going to be a quick overview of what you should know. This is the price area and this is the volume area. If you are looking at charts that don't have volume, you need to go ahead and add that because volume coupled with price movement is absolutely crucial when doing technical analysis. Right now we've got just a day graph up, an intraday graph, and it's a mountain setting, which basically means they've got all the prices plotted as points, and then they connect the dots with a line. And that's not very useful for technical analysis. So what we're going to want to do is we're going to change it, and you can either use open, high, low, close, or candlestick. We're going to take a look at open, high, low, close real fast to see what it looks like. And this graph is a little weird because it's intraday, so we're gonna look at a 6-month graph, daily. So each one of these bars represents a day of price movement and trading. So the idea with open, high, low, close is you're going to have a main bar with a tick to the left and a tick to the right. Here's a good example right here of a pretty big one. This line represents the day's range. The top of the line was the absolute highest point that the stock traded at during the day, and the bottom of the line is the absolute lowest point. The left tick on the line is where the stock opened, right here, and the right tick is where the stock closed, about right there. TradeKing makes these red and green, which is very nice because it's very easy to see what was up and what was down. I personally like to use candlesticks. I think they're a little bit easier to read. As you can tell, it's a lot easier to see what's red and what's green. Plus, there are patterns associated with candlesticks that we can get to later that is a little more advanced. But the deal with the candlestick is somewhat similar, except basically if you were to connect the ticks and make one big area, you get this. So you got the line, which is called the wick on these, that extends from the thick part. And what the thick part is, the bottom of the thick part, if it finished up on the day, the bottom of the thick part is going to be the open, and the top of the thick part is going to be the closed. And then this wick is going to be the extra range above and below the open and closed, which is very important. The day's range is very important as well. And so TradeKing has a nice little blue ball that accompanies this, so you can easily see what volume is accompanied with what price. Now you can have a standard or a logarithmic chart, and a standard puts every price equal distance from each other. And what a logarithmic does is it's going to make every percent move equal on the chart. So the prices won't be the same way apart, but a 5% move in this stock is going to look exactly the same no matter what price the stock is. And so logarithmic is usually the accepted setting. It's a little more accurate when doing analysis. You can get a better idea of what moves were more significant. So along with this, I like two other things, and I like two moving averages, and so I'm going to add those real quick. And all these is a simple moving average of 200 days and a simple moving average of 50 days. And so basically it sits here and it counts up 200 days back from one point and averages all the prices, and it makes a point. And then this just connects the dot, and it gives you a line. And the same thing for 50, but it only goes back 50 days. And so what happens is on the moving averages, they oftentimes are points of support and resistance, as well as buy and sell signals. You can see if the stock price falls under the moving average, the 50-day moving average, it's a sell sign, and if it raises above a moving average like this 200-day moving average, and again on this 50-day moving average, then it is a buy point, especially with high volume like we're seeing here. So that's kind of you could trade solely on that, but it's not as good as you would think, because it doesn't always work out well. So anyway, this is the settings that I like to have on my chart. I think it's very useful, very easy to read, very clean, and it makes things a lot better. So I'd love to hear your thoughts on this, and feel free to share your settings. Thanks, and have a great day.